Is this. We've been talking all morning about President Trump's comments overnight to us, to CNBC, talking about how he's not happy with the Fed's interest rate hikes, how he thinks strong dollar disadvantages the U.S., etc. What is right now, today, dollar and oil correlation? How tightly correlated or not is it?
Probably not very tight at this point. At this moment, the market is concerned with this perceived short-term flush of oil supply, and that's why oil has dropped from $80 just a couple of weeks ago to now close to 70. And you mentioned about President Trump making comments, and in fact, this is the new world. Oil markets face a whole new situation in which the market could be swayed by these decisions and comments made by the U.S. Trump administrations. And in fact, that has added a lot more volatility and risks to oil markets. And as far as the oil market is concerned, all it takes right now is one unplanned supply outage to get the bulls to rise and charge higher. So the market could turn and we could get back to high 70s and 80s quite quickly. Geopolitical tensions remain high, particularly in the Middle East.
You're calling about 78 a barrel for second half?
That's right. On average, 78 for second half of this year, in a likely quarterly range from 75 to 85 all the way toward the end of 2019.
All right. Okay, so what factors will be driving oil prices from next week onwards? Because Goldman Sachs was out with a note earlier on in the week that basically suggested it's actually the US administration that's in the driver's seat when it comes to the future direction of oil. I mentioned the Iran sanctions, of course, Trump's pressure on Saudi Arabia to do more to lift output, to reduce prices of oil and subsequently gas in the lead up to the midterms. And he's got his finger on the button when it comes to the SPR as well. So do you agree that the US is in the driver's seat here?
That's right. There's a whole new situation that oil markets face. A lot depends on the decisions and words that come from the U.S. Trump administration. You mentioned about Saudi Arabia, and it's interesting to watch what the Saudis are now saying. I think the Saudis are not going to prematurely flood the market. And of course, the big event that's going to likely impact oil markets in a big way is toward the end of the year, when the U.S. sanctions against Iran are going to kick in. The U.S. has said clearly that they want output from or exports from Iran to drop to zero. Well, that's a goal that is difficult to achieve, but we figure that exports will be reduced from Iran. The risk is how will Iran react to the pressure from the U.S.? Will they just threaten through words, or will they try to disrupt supply through the Straits of Hormuz?
IHS Markit, I was going to ask you that. How high do you put the risk of that happening at a blockade of the Strait of Hormuz?
Probably not too likely, but I think what will likely happen is that there will be significant cutback from the Iranian oil exports, and that will tighten the market considerably. It will cause the major Arab Gulf producers, Saudi Arabia in particular, to raise output, and that's going to spare production capacity within the Arab Gulf producers. And that is going to be the main driver of upward oil pricing toward the end of the year.
Okay, we've already seen some Asian countries deciding to halt their imports of Iranian crude, but what about China? Is China going to stop buying Iranian crude? Because, I mean, in this environment, the trade war with the United States, it could be a nice play for them to say, no, sorry, we'll keep buying it.
Yeah, I mean, China could totally ignore these sanctions, and China could indeed buy more, particularly if Iranian oil under those conditions is heavily discounted. And China may indeed buy more, while traditional U.S. allies like Korea and Japan will buy less, and India will likely buy less. And all in all, I think with the sanctions kicking in, Iranian exports will decline. And then we're going to have a much tighter situation.
Still watching? Perfect. Click here to watch another great video from CNBC International. Oh, and don't forget to subscribe. Thanks for watching.